Hi, this is Stephen from Share Navigator with a research alert on Gilead. It's a value stock that we like at the moment. Some of the highlights on Gilead. The ticker symbol is GILD. The stock is traded on the Nasdaq. It's currently worth about $155 billion with paying out a dividend of 1.6%. It's only started paying dividends recently. The current share price is 104.53, so please note that's not the price we intend actually buying Gilead at, but that's where it's at the minute. The 12-month target price to 18 month is about $120. Now we've already been at that this year and the share price has withdrawn from those levels. So we see a 20% upside, and that's because we're going to look at a number of strategies of entering this particular trade at a share price below $100 basically. The company has an excellent track record of sales and earnings, and it's optionable as well, which means you can do option strategies if you want. So just some of the business summary. It's a biotechnology company. It really focuses in on the core products that they have is in kind of infectious diseases, HIV, hepatitis C, things like that. Going on to the finances, well, let's have a look at their sales track record. And remember, all we're doing here in this particular slide is looking at, well, does this company have a track record of growing sales and profits, and can the company management team deliver? So if you look at from 2010, their sales were at 7.9 billion, and 5 years later they're at 25 billion. So that's a substantial increase, and you can see year on year sales have been increasing. Profits have a pretty similar story. There was one blip here between 2011 and 2012 where profits dropped, but you've had pretty much year-on-year growth right up to today, and you can see earnings per share is 7.91 at the moment, so that's a substantial increase. So just to remind you what earnings per share is, it's the profits of the company divided by the amount of shares issued. So it's, for each share on issue, how much profit is made in a dollar amount. That's all earnings per share is. They didn't pay out any dividends up to 2014, but now they are. The profit margin percentage has stayed pretty much constant and has increased substantially in 2014. We're coming towards the end of the 2015 financial year and we don't have the data just yet. In terms of long-term debt, a couple of things to note here. Long-term debt increased into 2011 from 2.8 billion right up to 7.7. That was to furnish the acquisition of a company. And then the debt reduced right back down to 3.9, and then 2014 you can see a massive increase in debt again. And towards the end of last year the company did a massive debt issue, and a debt issue is pretty much like a government bond except the company do it. And funnily enough, the company didn't exactly state what it was for. There's a massive share repurchase program on, but everybody believes the money is sitting there ready to do a deal, so they're ready to acquire another company. Average PE ratio has been pretty constant. You can see there at 11, 11, 11, and then in 2013 it was trading at 29 times earnings. So that goes to show you just this little lesson here, that investors were prepared to bid up the share price of Gilead in expectations that these profits were going to rise substantially. So that's telling you again, the market is always pricing in the future. So the fact that it traded at 29 times earnings in 2013, it was because the market knew massive profit growth was coming into 2014. So there's a lesson to be learned in that for you. So just a couple of things to consider. We've talked about it already. The concern is the long-term debt. It rose substantially after that massive debt offering. They haven't actually acquired anybody of note as a result of it, but the cash balance has actually risen accordingly. So if we looked at their cash account, you would see that the cash balance is over 10, 11 billion at the moment as well. So it's actually cancelled each other out, to be quite honest. They have a massive $15 billion stock repurchase program. So we talked about this before, how stock repurchase programs can improve investor returns, because in essence what the company are doing are removing the amount of shareholders in the company, which means that the profit on a per share basis should go up. One thing of warning here, the growth is due to be stagnant going into 2016, so that's something you need to be cautious about, which means that Gilead will trade at towards the lower end of its PE target range. So just be aware of that. Just from a technical standpoint, you can see this is a 1-year chart. The stock has traded all the way as low as $90 right up to 120. So this was actually one of our stocks early on in the year. It got up to our target price. We sold it. It's back down low now and we're happy to start taking a position in it again. 200-day moving average is at about $106, $107. We want to take a position below 100. So we're probably going to start selling the $95 strikes on this particular stock. So just in terms of going forward, this is really important. So from 2014 into 2015, and this year is almost over, sales are due to grow by 26%, which is really impressive. But please note that the growth rate of sales going into 2016 is due to be flat. The profit growth rate from 2014 into this year is 47%, which is enormous. So again, just be aware, growth in profits into next year is due to be flat again. So it'll be interesting to see whether Gilead start going acquiring other companies again pretty soon with that cash pile that they've built up. So in terms of estimating a target share price, we know that the share price formula equals the earnings per share multiplied by the PE ratio. We know that the estimated earnings for 2015 towards the end of this year are 11.65. And we know that, you know what, Gilead is traded somewhere between 11 and 29 times earnings. Now, I'm using the low end of this multiple. And the reason being is because growth is anticipated to be flat into 2016. So it's unlikely investors will give this a high multiple of earnings. But even at that, there's value here. Because if you multiply 11.65 by 11, you get a target price of 128.65. We've rounded this down to 120 because of that growth concern for 2016. So we're kind of being extra cautious with this. So even with that, we still see about a 20% upside in this stock because we're not going to take a position in this share unless it's below $100. So some of the ways to invest into Gilead, you could just buy the shares if you wanted to keep it really simple. Buy the shares under $100. Buy the call options. It's less risky than buying the shares. I wouldn't do that myself personally. This is probably the way I'm going to play this. It's one of my favorite strategies to sell the put options. So I'm actually going to sell the put options at $95. What does that mean? I'm going to get paid up front for agreeing to buy somebody else's shares at $95, which is about $9 cheaper than where they're trading at. So I'm getting paid to buy shares at some date in the future. Now, if Gilead doesn't go below 95, I don't get my shares. But that doesn't matter. I still got paid in order to buy them. So we're acting like an insurance company for somebody else's shares. You could do a number of strategies. We've talked about the bull call spread if you want. We talked about that last week. There's recordings in our members area if you want to see that. And we can look at a bull put spread as well. But because I'm more bullish on Gilead, I would probably just go with the short put option. If you have a small account and you don't have enough money for this, you can just do the bull put spread. It's in essence the same trade here, but you're just buying a bit of protection underneath that. So if you're interested in learning more about these strategies, please contact us about mentoring. We'd be delighted to help you out. This is Stephen from Share Navigator. Thanks and bye for now.